Gold prices surging past $3,000 an ounce. That's a headline that's, grabbed everyone's attention. What's driving this dramatic increase?
It's a perfect storm, really. Geopolitical uncertainty, trade wars, and a flight to safety are all playing a significant role.
Trade wars? Is that really the main culprit here?
A major one, yes. The escalating tensions between the U.S. and other countries are creating a lot of economic anxiety.
Anxiety that's pushing investors towards gold, a traditional safe haven asset.
Precisely. When things get shaky, investors seek stability, and gold has historically provided that.
Let's delve deeper into these trade wars. How are tariffs specifically impacting the gold market?
Tariffs increase the cost of goods, fueling inflation fears. This uncertainty makes gold, a hedge against inflation, more attractive.
So the uncertainty itself is more valuable than the actual inflation.
The potential for inflation and the uncertainty surrounding it is a key driver. Investors are acting preemptively.
And President Trump's tariffs are a significant part of this uncertainty, right?
Absolutely. His unpredictable trade policies have created a climate of instability.
Beyond tariffs, what other geopolitical factors are contributing to this gold rush?
The ongoing conflict in Ukraine is a major factor. It adds to the global sense of instability.
How does a conflict halfway across the world impact gold prices in the U.S.?
It's about global confidence. Uncertainty anywhere in the world can impact investor sentiment globally.
So it's not just about direct economic impact, but also about the overall feeling of security?
Exactly. Gold thrives in times of uncertainty and fear.
We've also seen central banks actively buying gold. What's the significance of that?
Central banks are diversifying their reserves, reducing their reliance on the U.S. dollar.
Is this a sign of waning confidence in the U.S. dollar?
It's a complex issue, but it certainly suggests a desire for a more diversified portfolio of assets.
So they're hedging their bets against potential dollar devaluation.
That's one interpretation, yes. It's a strategic move to protect their financial asset.
Let's talk about investor sentiment. How are average investors reacting to all of this?
Many are seeing gold as a safe haven, a place to park their money during times of economic turmoil.
Is this a rational response, or is there an element of panic buying involved?
There's likely a mix of both. Rational investors are hedging, while others might be reacting emotionally to the news. Yeah.
So it's a combination of calculated investment and knee-jerk reactions?
Precisely. The market is a reflection of both rational and emotional responses.
How does this current gold price surge compare to previous historical peaks?
It's certainly significant. We've seen similar spikes during times of major economic uncertainty, like the 2008 financial crisis.
Are there any parallels between the current situation and those past crises?
The underlying factors are similar: economic uncertainty, geopolitical instability, and inflation fears.
So history is repeating itself, in a way?
To a certain extent, yes. Human behavior and market reactions often follow similar patterns.
What's your outlook for gold prices in the near future? Will this surge continue?
It's difficult to predict with certainty. Much depends on how the geopolitical situation evolves and how the trade wars play out.
So it's all about the ongoing news and developments?
Essentially, yes. The market will react to new information as it emerges.
Any factors that could potentially cause a downturn in gold prices?
A resolution to the trade disputes or a significant improvement in global stability could lead to a price correction.
The weakening dollar is also mentioned as a factor. How does that play into the gold price increase?
Gold is priced in dollars, so a weaker dollar makes it cheaper for buyers using other currencies. This increases demand.
So it's a double whammy: fear driving demand and a weaker dollar making it more affordable?
Exactly. Both factors are contributing to the price increase.
Is it a sustainable trend for the dollar, or is it a temporary fluctuation?
That's a question for currency experts, but the current trend is certainly impacting gold prices.
How does this gold price surge impact the average consumer?
Indirectly, through inflation. Higher gold prices often reflect broader economic pressures that can affect the cost of living.
For those listening, what's the takeaway regarding diversification of investments?
Diversification is key. Don't put all your eggs in one basket. Gold could be a part of a well-rounded portfolio.
So a complex interplay of factors is driving this gold price surge. Thank you for shedding light on this fascinating market dynamic.
My pleasure.
Remember to like and subscribe for more insightful discussions. Thanks for listening.